Hello, how do I do my daily chart analysis of large cap stocks for swing trading purposes? We have our watch list open here and we are going to analyze few stocks together. The first one is ECL and we are going to do that analysis on September 9, 2025 after the market closed on the 8th of September. ECL. So ECL, yesterday the price went up. So the closing price is higher than the opening price when the markets open in the morning. So that means the price went up that day. But again, doing our chart analysis, it does not really mean much to us because we are going to analyze the chart looking at where the price is to where we want to buy, or when we bought it, we want to look at where the price is to where we bought it and where the price is to where we want to sell it, which will be the next exit. At this point, when you compare the price where it is now to the previous high and to the valley, we can see that the price is still high. So it's far from where we would like to buy it. Therefore, we will move to the next one. EQIX. So EQIX, we have two lines here, and this one at this point I'm going to turn it into brown, not gray, in the sense that it is the far side wall of the mountain, the upside wall of the mountain, but at the same time it can go away from it and come back to it before going back up. You know what, I'm going to keep it that, and the reason why I color code it is to mark the line that I would like to buy at. So by having it in brown, which is not the default color of those lines, it's like I'm highlighting it that is the value line that I would like to buy at next. So we have those two lines here, and it's okay to have multiples just for reference and see which one the chart is going to use. So we have two here, one higher than the other, but with the type of pattern that this chart has, it does wide mountain, but even within that it can still go higher. So it's kind of high and wide as well. So at this point, yesterday the price went down. The closing price was lower than the morning price, so therefore the price dropped. That's why it's red, and the bar will be red as well. But in addition to that, we can see the previous new high, and we can say that the price is going down. So it crossed this line that we like to buy at. Therefore, we will be targeting this one. But yeah, and it's still far from it. Therefore, there is not much we will do with that. So we'll go to the next one, which is FAST. And when a stock is purchased, we highlight it. That way, we know that it's already in the portfolio. So the way we'll analyze it will be different, because we'll be thinking about where to sell it, unless it keep going down and we are thinking about buying more. So, but at this point, for the stocks that are not highlighted, we are thinking about buying more. Even we don't have the money to buy it yet. That is the analysis that I do. It's not in the portfolio. It's a position in a way that it can be purchased. So the analysis will be done in relation to the entry point. So you will select your entry point and you will be analyzing the stock in relation to that entry point. And when the price is far from that entry point, you just go through your analysis very quickly. And when it's close to it, that is when you'll be paying attention to what is going on to see if it is continue going down or if it start going up. And that will be translated through a higher lows, like this low is lower than that one, which is lower than that one, so we'll have higher lows. When you're having that around the baseline that you like to buy at, you know that maybe it's done going down, it start going up, and then you can purchase some share at the first green bar that follow a pullback, a higher pullback. So, but yeah, and fast is going up. I don't know if we deleted some arrows here, because there is this arrow showing that we sold it here, so we must have purchased it at some point. I'm not seeing those arrows, so I don't know if they have been deleted by mistake or not. But yeah, so it's going up and it continue. So we saw it at some point here. I tend to put arrows on the chart to show where I'm purchasing it. That arrow will pointing up, and when I saw it, the arrows will point it down. So, but it's still going up. It's not done going up yet. So this concludes how we analyze our stocks for swing trading purposes today. We thank you very much for your time. We thank you very much for all your comments. We thank you very much for watching our videos. Thank you very much. You are that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. You just start small, testing your strategy to the stocks you have in your portfolio, and over time you'll customize your strategy and you'll have a curated watch list of stocks that you just trade from. And from there, once you have a confirmation that your strategy is working well with the stocks that you have in your portfolio, in your watch list, to increase your profit, you just increase the number of shares you purchase from per trade. If you are making $1 profit by buying 1 share of stocks, to increase your profit, you just buy 2 shares. Thank you so much for your time. And if you have debts you are trying to pay off and you don't think you have money to trade or to invest, you can just start small. You can focus on paying off your debts, but at the same time you can try to see if you can have $100 that you can save, and with that $100 you do your swing trade. There are some stocks you may not found for $100, but there are some stocks you will find for $100. For instance, fast is $48 a share. If you have $100 to spare and you can buy 1 share of these stocks. For instance, I don't know where I bought it, but I sold it here and it's like $42.26. For instance, right now it's selling for $48.19. So even if you didn't buy it as low as I wanted to buy it, you bought it somewhere here which is like 35, it's selling at 48, it reached a new high and you sell it. 35 minus 38, you can do that difference. 48 minus 35 is more than $10 there, if not 13 or so. 13, 16. I don't like to do mental calculus. So you'll have about $17 gross profit, and you might pay some fee to your broker. Like in Trustwire, for instance, it will be a few cents. So, and that means you still have some change left there. In this instance, we are targeting $1 per share, and you'll have about 16 or let's just say $16 profit there from that one share. So that's just the way you review it. Even though those stocks are large cap stocks and they cost more, they don't fluctuate a lot. You are not going to use your money quickly. You are not going to make a lot of money quickly either. And therefore, if you are just starting learning from how to swing trade or invest or trade, you can just start small with your own money while you are paying debts and just save few $100 to trade with, so that you can practice it. And once you are testing the strategy you like and you are testing the stocks you are trading, you will see if both works well together, and keep rotating your list until you find stocks that work well with the strategy you are trading, because you cannot change the stocks, but you can change your strategy. And once you have a good combination of both, by that time, by the grace of God, you will be done paying off your debts. You will start allocating some of that money that was going toward paying extra debt toward investing more. So, and if you have a job, it does not mean you should not be investing in the stock market or trading. Just view it as another stream of income, a way to put your money to work, so that you do not spend everything you are earning, because frankly we shouldn't be spending everything we are earning, but sometimes we are not earning enough that our expenses can be higher than our paycheck. So, or sometimes our need and wants. So therefore, you have to review your budget, how much you are making, how much your expenses are, what are the monthly expenses that you pay for every time, and what are the wants, and what are the irregular expenses that are required but you don't pay for every month. And just walk through those things and allocate some budget for them, and see if you have some left that you can allocate toward investing, trading, or paying off debt, or a combination of both. Thank you so much for your time.